What's up everyone, it's Scotty with Money Investing. In this video, we are going to be talking about one stock that is going to be reporting earnings tomorrow before the market opens. And I've actually never talked about this company before. We've talked about its competitors, but not this company ever on the channel. So hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. And I have been posting a lot of private videos, members only videos. And if you want to get access to all those, again, link's going to be down below for you to join. There is going to be that 16% annual discount available till the end of this month. And I actually posted a video for members only, one new stock that I'm buying and starting a new position in. So if you want to learn which companies I'm actually buying, portfolio updates, options alerts, a lot of tutorials and educational content, again, link's going to be down below and we'd love to have you on board. So the company that we are talking about today is going to be American Express, ticker symbol AXP, and they are going to be reporting earnings tomorrow. And the expected earnings per share is going to be a little bit over $2.81, and revenue is expected at just over $15.4 billion. Of course, it kind of competes with Visa and MasterCard in the payment processing sector. It's a little bit more niche product. So again, it's not as widely utilized as Visa or MasterCard for that matter. So very quick qualitative analysis. So this right here is going to be the market share comparison where Visa, more than half of the market share is controlled by Visa, over 52%, coming in at a close, well, actually not a close second, but second place, MasterCard 22%, and then coming in at a close third, 19.6% market share is going to be American Express. So Visa obviously is the clear leader in the credit card market with a market share of over 50%. MasterCard is the second largest player with a market share of just over 20%, and American Express is the third largest player with a market share of just under 20%. Now, American Express has a smaller market share than Visa and MasterCard because it is more niche product. American Express cards are known for their high rewards programs and exclusive benefits, but they're also more difficult to be approved for. And as a result, American Express cards are not as widely used as Visa and or MasterCard. So that's something to keep in mind. Again, they can, increase their potential opportunity here, but the Visa and MasterCard dominance is pretty significant. So there's only 3 or 4 different companies out there that are competing in this space. Those are all, again, Visa, MasterCard, American Express, and Discover. So the growth opportunity is there, right? I mean, they can go from 19 to 20% all the way up to 30, 40% over the long term, depending on how they market their credit cards, how they actually, market their different services that they offer to businesses and individuals. And Visa has got a much bigger problem. It's more vulnerable to competition, right? You're at the top of the mountain. Then obviously you're more vulnerable to getting pulled down when somebody who's actually climbing the mountain, right? So that's a very simple analogy that I can use. But we'll come back to the technical analysis. But revenues, you'll notice for the first quarter, were just over $14.2 billion. That was a 22% increase year over year. So very strong numbers coming in. And net income was slightly down about 13% to $1.8 billion, and diluted EPS was down about 12% to a little bit over $2.40, and 2% decline in shares outstanding. So coming in at just under 744 million. They have consistently bought back shares over the last several years, 4% share buyback. We'll go over that in just a minute here. So this right here is going to be their aspirations and their growth plans. So 2023 guidance, they're expecting EPS to be somewhere between 11 to 11.40 and revenue growth of 15 to 17%. And 2024 plus, they're expecting revenue in excess of 10% growth and EPS growth in the mid-teens as well for the company. This is going to be the historical network volumes trend. You can see that overall, since 2000, it has consistently grown. And this is the gray line is the overall trend line. And every time the actual, of course, we see a little bit of a recession, some compression in the economy, we see that dip and then it recovers back higher above trend. Overall, just very, very consistent with the overall trend here to the uptrend. And of course, we've seen an 18% year-over-year decline due to COVID. And now we're way above the trend right now when it comes to spending and, of course, people using credit cards. So revenues have gone from $7 billion to over $12.5, trailing 12 months sitting at $14.5 billion. Net interest income has gone from 4.6 to over $10.6 billion. And total revenues have gone from $30 billion to over $52 billion for the company as well. Consistent share buybacks, so they've gone from about 1 billion shares down to 750 million shares, and diluted earnings per share has gone from 488 to over 952. That's over a 100% increase in diluted earnings per share for the company. 56% gross margins, which actually are going to be a little bit lower than Visa, I'm assuming, because Visa's margins are just off the charts. I mean, they've got a 49% net income margin, not to mention their gross margins are over 75%, right? 75% gross margins, net margins of 52% compared to American Express, where net margins are a little bit under 14%. That's actually really, really poor, and 56% in gross margins. Return on common equity, 29%. Return on assets also really poor at 3% for the business. This right here is going to be the valuation. And because of those reasons, American Express trades at a far lower valuation compared to Visa. So if you come over to the valuation, Visa trades at 32 times earnings and a 16 times sales multiple, whereas American Express trades at 18, 19 times earnings multiple and a little bit over 2.5 times sales. That's absolutely crazy, the stark difference between these two companies. And balance sheet wise, Visa definitely comes out on top as well because they do have only $1.47 billion of net debt, whereas American Express has $2.67 billion of net debt. So a little bit more net debt. In other words, a little bit more debt than cash on the balance sheet. Current ratio and quick ratio are also over 1.5. So going over to the fair value or the intrinsic value for this business, their expected growth rate over the next 4 years is going to be a little bit over 6.7%. So that definitely is going to be very much on the lower end, because if you come over here, so if you go over to American Express, we go over to fundamentals, earnings expectations, you'll notice that earnings are expected to grow from 1107 to 1465. Exactly. We can even update this to 1465 here, and that growth rate is going to be over 7% for the company. So we plug in 7%. They do also pay a dividend, if I'm not mistaken here, a dividend of about 1.3%. So we can go with an 11% discount rate, 10% margin of safety, minus 4% in share buybacks, because that's really what the consistency has been. The company's been buying back shares every single year. So minus 4% over here. And then we plug in a P multiple of, let's just go with 16 to keep things interesting. And we get a fair value of close to $166, and it's trading at around 174, 175. So not that far off. 4.6% potential decline needed in order for American Express to be trading at its fair value. And I'm actually going with a lower P multiple of 16 and a 7% growth rate, very strong share buyback, and an 11% discount rate, 10% margin of safety. So fair value is going to be closer to 166. And this right here is going to be the sensitivity grade, where you can take a look. And again, different growth rates, different P multiples will put us at different fair values. I would even be more comfortable at a 7% growth rate and a 14 times P multiple, because that's a 2-peg ratio, and that's going to put us at 146 for the fair value for the company as well. Something to keep in mind. Now, again, Visa obviously is going to be the clear winner in this space. Definitely got lots of potential, more market share, better margins, better profitability, better balance sheet, better share buybacks. All those things are very true, but you are paying higher valuation for that stock, right? So Visa trading at 32 times earnings, 16 times sales, whereas American Express, 16 times earnings, less than 3 times sales. And if you compare that to MasterCard and come over here, you'll notice, again, much better margins for MasterCard, 44, 45%. And you've got a valuation that, again, is trading at 16 times sales, 40 times earnings, with a gross margins over 96%. Absolutely wild. Net margins over 41%. And you've also got a balance sheet that is a little bit worse than American Express. So those are some things to keep in mind. I do like American Express. I actually prefer Visa more than any other two companies, but then all three, I think, are they've got like a pretty much of a duopoly, is it? Or oligopoly, I think something it is. There's a specific number of companies kind of control the entire market. But for American Express, it's been trading in this range for the longest time. So you'll notice that we went up, sold off, went up, sold off, went up. So it's really been trading sideways. And this right here is going to be that resistance. Support level sitting roughly at 148. So right now we're kind of approaching $180 as a resistance right now for Visa. And if we do see a little bit of a pullback and a rejection, I wouldn't be surprised for it to come down to the 140s and 150s again, which is where it would be, in my opinion at least, a little bit more undervalued. So I hope you guys enjoyed this video. And again, tomorrow they are going to be reporting earnings, which is going to be very, very interesting. Make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below. Don't forget, we've got a lot of private videos and tutorials and educational videos, alerts. Everything's going to be included with that 16% annual discount for our Patreon. As always, happy investing, and I'll see you all in the next video.